Hello, I'm Susan Seabrook. I'm a tax partner with the Washington, D.C. office of Eversheds, Sutherland.
Hi, I'm Ben Jones. I'm a tax partner of the London office of Eversheds, Sutherland. We're here today to talk to you about current trends in the taxation of the digital economy. For us and for our clients, we see this as an absolute key issue as digitization pervades not only traditional business models, but gives rise to new and very profitable other business models.
I think what we often say and have heard is that the digital economy is the economy, to sum up what you just said, actually. And the traditional models of taxation do not fit well with the digital economy, or at least the taxing authorities don't feel that they do. They don't feel that they're actually getting being able to tax the value that is derived from the activity within their jurisdiction. And so there's been a lot of thought put into its studies, and models put forward in terms of how do we tax this new digital economy.
Yeah, the starting place has been with the OECD in terms of their BEPS project, and their Action 1 was actually addressing the digital economy. They've considered it long and hard. They've sought input from membership, but as yet we have no consensus on an approach. The approach that they've considered include a virtual permanent establishment context, so taxing by reference to economic presence rather than physical presence, revenue-based taxes on digital services, equalization levies intending to balance the playing field between domestic and non-domestic providers, and sales tax such as VAT and GST. But we're far away from a final position on that. So recognizing that jurisdictions are sort of wanting to attract and tax the value associated with this, they've acknowledged that there could be interim measures that could be introduced as this analysis goes on. What these might look like is hard to say. One possible example could be the EU measures proposed recently, which included an interim measure looking to impose a 3% digital services tax or revenue-based tax on digital services provided within the EU. But even within the EU, it's very difficult to get consensus in relation to that either. So I think we're going to see increasingly perhaps unilateral divergent measures.
I think that's right. I think we're already seeing some of them. But when you think about it, the proposal described measures that go from completely objective to completely subjective. And so you're looking at trying to define the value in a different way. And you're not only not getting consensus on how to tax it, but then even within the EU, you would have to figure out there should only be one pie, right, that's divided up.
Yeah, who gets part of that pie?
Exactly. And so you're seeing a proliferation of unilateral measures by various countries. We've seen India and Israel and some others. I think France and Germany have some ideas on that.
Yeah, exactly. Well, they're key behind the EU proposals, and the UK has said they want to adopt an interim measure as well. So it's definitely moving forward at pace.
Yeah, it's moving forward, and these unilateral measures, even though they're supposed to be temporary.
Yeah.
I mean, I think we all know that temporary measures sometimes have a tendency to become permanent.
Absolutely, absolutely. So this, we see as an absolute key issue to basically all businesses. As you say, the digital economy is just the economy these days. So we really think that businesses operating across borders need to focus on these developments, jurisdiction by jurisdiction, and pay close attention to these.
I think that's right, and I think with the U.S. we've already seen in tax reform measures that are really targeted at getting at this value and keeping it in the U.S.
Exactly, so if it's happening in the U.S. then it's going to catch on elsewhere. I think that's normally the way. For more information, please access our website, eversheds-sutherland.com. Otherwise, this has been our video on the taxation of the digital economy. Thank you.